Welcome to the Market Meridian Monthly Audit. Today, we move beyond price action to conduct a formal attribution analysis of the global macro landscape. Our objective is to quantify risk-adjusted returns across commodities, fiat currencies, and digital assets over the trailing 30-day window. We will evaluate CAPM implications for gold and silver, assess interest rate parity shifts in G10 currencies, and perform a liquidity solvency test on Bitcoin's current correction. By the end of this 12-minute institutional briefing, we will issue formal overweight and underweight ratings for the upcoming fiscal cycle, with clear forward-looking guidance for the next 7, 15, and 21 days. If you demand institutional-grade macro analysis, subscribe to Market Meridian and hit the bell. This is the only briefing you will need this week. We begin with the hard asset ledger. Gold, XAU/USD Gold has exhibited an extremely high coefficient of variation. Despite a peak-to-trough swing exceeding 21%, its net 30-day return stands at just 2%. Structurally, gold remains range-bound. Persistent central bank accumulation offsets the rising opportunity cost of holding non-yielding assets in a high-interest rate regime. This is a stalemate between safe haven demand and Fed policy rigidity. Silver, XAG/USD. This is our high beta standout. Silver endured a 37% liquidity flush before staging a sharp V-shaped recovery, delivering a 14% monthly return, the strongest in the entire commodity complex. This outperformance is driven by industrial consumption alpha, inelastic demand from photovoltaic solar, EV electronics, and green infrastructure, creating a fundamental floor that gold cannot match. Brent crude oil remains a price taker within a tight supply-demand equilibrium. Settling at $70.80 for a 10% monthly gain, prices reflect a geopolitical risk premium balanced against softening global GDP forecasts. It is a range-bound asset with no structural breakout yet. Now moving to the foreign exchange liquidity ledger, the largest and most systemically important market in the world. The US dollar, DXY up 1.2% in 30 days, the dollar remains the global clearinghouse of capital. It is capturing yield spread alpha as the Fed maintains its higher-for-longer terminal rate, creating a liquidity vacuum that pulls capital from every other G10 currency. Crucially, the DXY is a weighted basket. Over 57% is dominated by the euro. This means dollar strength is not just about US growth, it is a reflection of Eurozone stagnation and ECB dovishness. A break above 98.80 will confirm a secular uptrend, not just a corrective rally. Euro to US dollar down 0.7%, trapped in a growth deficit. The ECB faces near stagnation and earlier dovish pivots, leaving the euro with no margin of safety against the dollar. British pound sterling to US dollar up 0.5%, a relative value outperformer. The BOE retains more credibility on inflation control, creating a policy divergence that supports the pound against both the euro and the dollar. Japanese yen, US dollar to Japanese yen. The yen is the ultimate victim of the global carry trade. At 155.8, the yen is being systematically shorted to fund high-yielding assets, eroding purchasing power and creating a one-way downtrend. There is no meaningful support until verbal intervention escalates to actual market action. Singapore dollar, SGD, USD down just 0.3%, acting as Asia's low-volatility safe haven. It is a store of value, not a growth currency, stable, but no alpha. Bitcoin represents the weakest asset in our 30-day audit, a systemic de-risking event. From a peak near $97,000 to current support near $65,000, Bitcoin has fallen 20 to 23%, failing its store of value test against a strengthening US dollar. This is not a dip, it is a post-halving liquidity trap, a marking-to-market of excessive speculation. Correlation data confirms the shift. Bitcoin now moves tightly with the Nasdaq 100 as a high beta risk asset, while its correlation to gold has turned negative. It is no longer a hedge, it is a liquidation proxy for global risk sentiment. Based on our full 30-day fiscal audit, Market Meridian issues the following model portfolio changes. Overweight, top buy, is silver. Reason 1, mean reversion and relative value. The gold-to-silver ratio has collapsed from the high 80s to 55, signaling institutional rotation into undervalued, high beta silver. Reason 2, industrial capex floor. Green energy, solar, and EV demand create a structural demand inelasticity that protects against deep corrections. Reason 3, momentum convergence. Short-term golden crosses and institutional accumulation confirm a shift from speculative trading to strategic positioning. Underweight, top sell, is Bitcoin. Reason 1, negative gamma and liquidity void. Below $65,000, there is no reliable buyer of last resort, only cascading liquidations. Reason 2, discount rate compression. Higher for longer yields crush the present value of zero-yield speculative assets. Reason 3, technical breakdown. Bitcoin has breached its 50-day moving average, turning former support into overhead resistance near $72,200. This is your official market meridian forward volatility calendar, the roadmap for the next 3 weeks. 7 days, short-term catalyst. Focus, gold and DXY. The US non-farm payrolls and inflation data will act as a binary catalyst for Fed policy repricing. A strong jobs report sends DXY to 98.80 and pressures metals. A weak report unlocks upside for silver and gold. This is the highest volatility window of the month. Brent crude remains on watch for geopolitical gaps. 15 days, medium-term policy arbitrage. Focus, silver and pound sterling to US dollar. BOE forward guidance will drive pound divergence against the euro and dollar. Silver extends its relative strength as industrial flows compound with safe haven demand. We also monitor US dollar to Japanese yen for intervention risk. The yen is nearing policy pain thresholds. 21 days, trend-setting structural move. Focus, silver and Brent crude. Oil will break its $69 to $72 range, defining global manufacturing input costs for Q2. Silver will confirm a new structural uptrend or consolidate. This sets the tone for the entire precious metals sector. Bitcoin will also confirm its final bottom or break to new lows. To conclude the market meridian 30-day fiscal audit. This cycle rewarded industrial commodities led by silver and reserve currency strength in the US dollar, while systematically penalizing high beta speculative assets, led by Bitcoin. Our formal ratings. Overweight, silver. Underweight, Bitcoin. For the next 3 weeks, prioritize DXY and gold in the short term, silver and sterling in the medium term, and silver plus crude oil for the trend-setting move. All analysis is for educational and informational purposes only. It does not constitute investment advice. All trading involves risk. If you want our proprietary entry zones, stop levels, and price targets for every asset in this briefing, type levels in the comments. This concludes the macro ledger. Stay disciplined, manage your value at risk, and we will see you in the next Market Meridian briefing. Thank you for your big thumbs and subscribing. I will talk about BidMac Index and Instant Noodles Index later.